She said that you're really not looking for absolute financial freedom. What you're looking for is this meaningful freedom where you can work when you want, how you choose. And sometimes it's the spouse that helps make you recognize these things. So I realized that I could actually achieve that lifestyle much sooner. And so that's what I've been doing now for the last 3 years, where I take it easy to some degree in the summer. We have a cabin on a lake in northern Wisconsin, and we hang out here. And then when my son goes back to school, I go back to work, and we work hard through the rest of the year.
Hi, everyone. Welcome to Investing for Generational Wealth. I'm John Lapp from Clive Capital, where we help high earners just like you invest outside of the stock market to passively achieve long-term wealth generation through superior risk-adjusted returns, long-term passive income or cash flows, or tax benefits. And together with you, we're investing in over 1,000 multifamily apartments under renovation, over 500 single-family rental homes under development, and in more than 350,000 square foot of industrial real estate and 700,000 of private loans. And we've expanded to other asset classes such as oil and gas ventures, all with the goal of helping our investors, customers just like you, create diversified, balanced portfolios. Before we begin, a quick disclaimer. As always, we're not financial advisors. All investments are subject to risk. So please do your due diligence and consult your CPA and your attorney before making any investments. With that, again, I'm your host, John Lai, and we welcome Brian Herriot. Today's episode is going to focus on rewriting your money scripts so that you can achieve your lifestyle goals. Brian's an author, a speaker, a founder of Herriot Financial, and he has a background with firms like Accenture and Point B. And he's going to share with us how to really reshape our beliefs in how money can unlock true time freedom, financial freedom as well. So, Brian, for those of us who don't know your career trajectory, could you give us a little bit of background on how you got to where you are today?
Yeah, definitely. Thanks for having me, John. Yeah, so I'm an engineer by training, did management consulting for quite a few years with a large firm and then a medium-sized firm up in Seattle, Point B. And actually then also did a short stint at UCSF Health. I'm based in the San Francisco Bay Area, managing and opening of their hospital. But I have been interested in finances and money my entire life, and most recently have shifted focus into doing more financial advising for entrepreneurs and pairing that also with entrepreneurial coaching. And this is for individuals that are like me, that have come from high paid employed work, but have decided to go independent consulting or do coaching or something of that manner. And the concept you mentioned that I really promote is this one of time freedom. So I was on the financial freedom journey, trying to reach it like many of us, increasing income, saving, all of that sort of thing. I was actually getting close. And then in 2020, the big COVID crash hit and changed my trajectory. And I told my wife we wouldn't necessarily be retiring anytime soon. And she asked me, what would you do anyway if you're retired? Because like probably a lot of the listeners here, we like to work, right? We're creative. We want to contribute. And I told her the answer was, I'd probably do the same, just a little bit less. She said that you're really not looking for absolute financial freedom. What you're looking for is this meaningful freedom where you can work when you want, how you choose. And sometimes it's the spouse that helps make you recognize these things.
Right.
So I realized that I could actually achieve that lifestyle much sooner. And so that's what I've been doing now for the last 3 years, where I take it easy to some degree in the summer. We have a cabin on a lake in northern Wisconsin, and we hang out here. And then when my son goes back to school, I go back to work, and we work hard through the rest of the year. That's my kind of quick synopsis for you guys.
That's great. Thank you for that. And have you reached your FIRE number, your financial independence number?
No, absolutely not. And that's the thing, like to live, especially in California and have a home in a cabin in Wisconsin, our expenses are not small. And so when you multiply that by 25, which is that magic number, you're getting into $5, $6, $7, $8 million. And I'm still pursuing that, but I don't want to just burn the candle at both ends while I'm getting there. So I've come to terms with this concept, which was strange when I first realized it, which was that if I am willing to work longer, but perhaps maybe just in the perfect way, by working longer, you're more likely to feel comfortable taking longer breaks now. So in this strange way, working longer and later into life is more freeing than trying to cram it all in and retire early. Odd
Did
to me,
you,
but go ahead.
I was going to ask, did you have to change that, like a mental mindset where a lot of people pursue fire, they're going to run, save a lot, and then they have a magic number in mind, 25x, 25
Yep.
times your expenses, and then the 4% withdrawal rate and all that other stuff. But did you have to change that mental mindset in order to get to the place where you are now?
I absolutely did, because it was more than a mindset change. I actually experienced it, and I'm so glad that I did. So in June of 2023, I figured out I was going to take this time period off of work. It was going to be 3, 4, 5 months. And I was just going to see how that went. And it was great, right? Initially, we took a month in Portugal, slow travel, 2 months hanging out on the lake, water skiing. And then my son went back to school, and you just looking around at everybody working and contributing. And I just had this urge, like I wanted to get back to it. And I was so glad that recognized that in the moment, because now I know, like my biggest fear was that I would have pushed hard, stopped working at 52 or something like that, and then realized it and then ended up going back anyway. But I was also, and so at least this way, I know that, of course, I need to earn and save and pursue passive income and all those sorts of things, but I want to do it in an enjoyable, interesting, just maybe a little more dynamic way than the traditional path.
Yeah. For those who are interested in following that same path that you did, what do you have to keep in mind? I would imagine you still have a date in mind, like when you would work until such a date, then you would start your real retirement.
Yeah.
I think what you're suggesting is like post-fi, you're still working,
Yeah.
and you might have a financial independence number that you have in mind that you're accumulating toward. Yeah. What would you have to have in mind to get to that end number or end destination?
So what I did and what I teach is first like to think about 1 year in your life. And then that's not enough, but it's a place to start. And in 100% financial independence, completely free, you've got your expenses and they need to equal 4% of your investments. That's the coverage. Now, mine wasn't hitting that. And so I added in this flexible work to it. So the financial freedom equation, translating that to the time freedom equation, the time freedom formula is lifestyle expenses equals your investment income plus this flexible work. So when you do that, it's actually surprising because you're like, oh, that amount of flexible work, the money that I need to net is really not that much compared to what you're probably already making. That's the first step to just reframe your thinking about what this looks like. Now, we're ambitious people. We're probably going to still make more than whatever that flexible work number is. And so then I have a calculator. It's timefreedomcalculator.com. And it is kind of like a retirement calculator, but not really, because it allows you to add this flexible work in after this free age. So that's how you take this 1 year concept and you put 6, 10 numbers in there. And you can see how soon you could achieve this free age, which is like a retirement age, but it's a retirement age that also includes some working after if you choose to. And so once you do that, typically when I work with, some people are in such a good position, they could transition it into this in a year. Most people, it takes 3 years, surprisingly. And this is for a mid-career person that has some money saved, has expenses too. And then if someone's earlier in their career, or if they're starting over or starting again for some reason, it can take longer, usually up to 10 years. But it's this really interesting joint process of figuring out the money part and figuring out this different way of working. And if you put those together, it's much quicker than trying to do it purely with just the money.
Do you find that there are certain occupations that benefit from or that are amenable to working, I guess, part-time?
Yeah.
For example, we're at Amazon and I just can't imagine working part-time, if even like 40 hours, less than 40 hours. And so how do you go about maybe even broaching that conversation with an employer if you're a W-2, and then maybe thinking about going solo, and like, how do you branch out in that thinking?
Yeah. And I was in that same situation for a long time. And I think you have to start that way. You have to build skills and you have to build your network and you have to seek this valuable employment to get those things. And so I did the same thing. It was just for me. Like what happened for me is just a quick aside is I was 37 years old, taking the casual carpool in San Francisco across into the city to go to work. And it was right when Marissa Mayer was named CEO of Yahoo. This was sometime.
Yeah, I was there when she was at Yahoo.
I hadn't heard of her and I thought, oh, she's 37. And I'm like, I'm 37. I'm like, should I be the CEO of something? And then I looked her up and I realized she was from a small town in Wisconsin, which was 100 miles from where I was, graduated high school the same year. And then I really started to feel inferior. But I had these like rapid succession of two thoughts. One is I should be the CEO right now. Maybe I could do it right away. But then the next one was, wait a second, that's not what I want. And that was like, I'd seen many people younger than me more successful, but that one for some reason really hit me because it was her upbringing was so identical to mine, which was so interesting. And so I had to make a decision at that point. And it's not like the next day I decided to start pursuing freedom. Like things take a little while to work out, but I had to choose, right? So I was like, if I'm not going to go after this CEO job and all the stress and good money, but stress associated with it, I need to veer a different way. And to truly get that flexible way, you're talking independent consulting, which is the route I took, or coaching, or some other, it's frowned upon in Silicon Valley, but some other lifestyle business. Something not your scalable unicorn type business, but something that you can design around your life. And you can build a small team and have one or two or three people, and you can leverage them and you structure your work in such a way that you can put it at certain times of the year. So that's going to be how it works. But yeah, I agree. I don't know how you knock on the door of your boss at Amazon and say, I want the summer off. That just doesn't work.
Yeah. Do you find that agents and AI is all the rage these days? Do you find that's helpful in what you do as an independent, a team of 2 or 3, and you can pretend to be a team of 10 with agents or generative AI? I think your video is frozen. Are you still there?
See if that,
Okay.
I'm back now. Sorry about, must be the Northwoods internet.
Yeah.
It's usually pretty good. What were we talking about?
Agents and AI. Yeah.
That is a huge factor. For me, though, it doesn't replace having at least one assistant in some way, shape, or form, because when you're running all the agents and the AI, without that, you're still accountable. And so you want to pass that on and make your one person more productive so that you can be thinking about the more strategic things, but it absolutely plays a role.
Yeah. The topic of this particular podcast is rewriting your money script. And talk about that. Was there an aha moment, and when and how did you reshape your beliefs?
Yeah. So this is something that I really didn't think a lot about until I did financial advising. So I've just done this in the last several years. And I always thought that everyone had the same mindset around money that I did. And you're taught everyone should save and invest, and that's the right way to do it. But I've met people that don't necessarily have that as their strength, but are still 100% successful and can reach time freedom, financial freedom without that mode. So I think the financial planning industry really pushes you towards save and invest, save and invest. That's the one way. And if you're good at it, you're lucky. I was good at it. I am good at it. I'm lucky, but it's not the only way. My son, for example, you give him $100, it's gone the next day.
My daughter as well.
And you're like, I try so hard, but it's just not the right makeup. But my son sold a used car at 7 years old. So he is a different type of money personality, which I call the money maker. And that's your entrepreneur, that sort of person. And you can generate a lot of wealth that way, much faster, actually. Yeah. And you can be very successful. And then you have the fire people, or my mother-in-law, somebody that is so good at minimizing their expenses that you really don't need the other two pieces, the saving and investing. You need a little bit, but not that much. And so people tend to one of these three. And I think if you want to generate true wealth and true freedom, you just have to figure out which one is yours and align the work that you do and how you pursue this overall time freedom to align with what you're strong at. Like I could preach and teach to my son to save until the cows came home, and he would not do it. So I don't think he'll ever be employed. he will be an entrepreneur from day one. And that's great. I'm going to have to take some of his money and hide it away for him, I think.
How do you either change your own mindset or like change, like you said, change someone else's? I'm going through this with my daughter as well. I think she's very entrepreneurial, but she doesn't have a bone in her body to save money. So I want her to get to that point. Like she can be entrepreneurial, but you have to think about planning as well. And so like, how do you get to the point? Maybe less critical for the youth, although it's still somewhat important, but like more critical for people that are in their career.
Yeah. But when you described that, my first thought was for our son. And I don't know, I'll tell you one way that doesn't work because we did it. The 3-jar method where you get $100 and you put a third for savings, a third for spending, and a third for charity.
Yeah.
My son somehow convinced us that he should spend it all and that he would get more. I'm like, I'm the adult in this family. Anyway, I'm still struggling with that, actually, how to answer that question. I think for youth, what they say, your child sees what you do. They definitely don't do what you tell them to do, but they see what you do and it's modeled. I think that's going to help long-term, but I'm going to have to assist. I think even any entrepreneur, that's why you see those entrepreneurs like make so much money and then lose all their money because they don't have the ability to take some of it, peel it off and save it away. I think you need to find that trusted person in your life to help you with those things because it's hard to change those things that are ingrained in you from genetics or your youth or whatever it happens to be.
Yeah. And you be a financial planner, a financial advisor, not that you're in that capacity today. We're just talking amongst ourselves, but people in place normally invest in the equity market. I did the same thing for 30 years. And it's because what financial advisors always tell us, and you should be invested, take whatever it is, 20% of your income, set it aside for investing. But is there another strategy? I have my perspective on that. Obviously, big believer in private equity and kind of leveraging both other people's capital as well as your own capital to invest in things that to date has been unavailable to the normal retail investor. But I'd love to understand your perspective.
Yeah. 2 things I can say to that. One is I love income, right? Because the income, any investment, real estate, business, anything that produces income is perfect for the time freedom lifestyle, right? Because you're able to use that while the base asset is growing. I think that's a wonderful strategy. I think another one, the long-term buy and hold investing, very valid, wonderful strategy. It works. I just think that it's been so good for so long that when something bad happens, a lot of people are going to be really surprised. I did have a relative who retired in the year 2000, just before the crash, and it took 10 years to come back up, and that destroyed their retirement, and they had to go back to work. So that strategy is wonderful, but if I'm advocating for living time-free life and accessing your money early to support this flexible lifestyle, it's not perfect. And that's what I experienced when that market crashed in March 2020, because I was close to needing to use the money. And so I actually also advocate for momentum-based strategies where you're finding the thing that's going up, riding it. And when it starts to tip down, then you're getting out of it and moving over to the other. So there's models, and this is also something I think that was originally only available to the wealthy and the institutional investors, but now you've got Allocate Smartly as the platform of choice that I use to invest in these other ways. And I think if you put them all together, that is deep diversification of your money versus just different types of funds in a long-term buy and hold strategy. If you have real estate plus the passive income plus the momentum plus the buy and hold, they're going to help level each other out.
Could you talk a little bit about momentum? Because we had a guest that saw momentums in the market, changes in the market, and even I would call them or depict them as fads. And he would look at those fads, look at the companies that were leading those fads, leading those changes in market, and then invest in those. And then as soon as he believes that the fads would be waiting, then he would get out of those equities and move on to the next fad. And so I don't know if it's similar, but I'd love to hear more about that.
What that sounds like to me is that he's trying to predict the fads which I don't do because I can't predict anything. So if anyone's interested, I definitely go check out Allocate Smartly. They've got wonderful information on there. I am not affiliated with them at all. I don't get anything from them. I just love their product. But they have, I don't know, 75, 80 plus models or algorithms on there that are tracking. But basically, in a nutshell, is have, say, 15 ETFs that cover US stock, international stock, bonds, gold, commodities, like just a nice broad and a cash account, right? So you have almost every type of asset that you can get in ETF form that will work in different types of economic regimes, right? And usually something is going up. If everything's going down, maybe it's the gold that's going up, or if everything else is, but sometimes 5% of the time, everything is going down. So you need that cash outlet. And so if you think of your money as can go on any one of those horses and you have a set amount of money and the algorithms are looking to see which one of those 15 is going up the most, short-term momentum or long-term momentum, the strategies are slightly different. And you get in on that one, or if two of them are, you split it among two. Usually it's invested between 2 and 5 things at a time. And then 3 times a month is how I do it. It takes a look at everything and you can say, it might say, oh, this one's starting to go down. So it's after it starts to go down, right? So I'm not predicting anything. It's when it starts to tick down, you move out of that one and over to the one that's starting to tick up. And so the idea is that you're always moving over to the horse that's winning. And so you're never going to have the best return because you're never going to be in it at the bottom. But the idea is that you're always in second or third place. And if you add a whole bunch of second or third place finishes together over a long period of time, long term, you're going to end up in first place and do very well. And that's the beauty of the upside. And then on the downside, if you get out of something as it's ticking down before it goes way down, that's where you get into protecting yourself based on the concept of loss asymmetry, where if something drops 50%, you need to gain 100% to get back to even. And if you can combine limited loss, but still having the ability to grow, it's worked great for me. I've been doing this over 6 years. That's just my 2 cents on momentum investing.
Got it. Okay. So is it similar to, and I haven't traded stocks or ETFs actively for some time, but do you set limits to when the stock could fall and then beyond that certain limit, it would sell automatically, and then beyond a certain limit, it would buy automatically?
I don't have my own proprietary algorithm. I am looking at the 80 that exist out there and doing my own assessment of which of the 80 are strong or weak. Of those 80 algorithms that doesn't include a cash account, you can just take that off the board. Or if it doesn't have gold, take that off the board, because otherwise you could enter this economic regime where gold is the thing that's going up, but you have no way to access it. And so once you settle in on what a really good model is, I usually split the portfolio among 2 or 3 models, and then they work together. So you get some diversification there as well.
Got it. Okay. That makes a lot of sense. And then how much of that accounts for your portfolio? Like how much, if I were an investor and I was 95% invested in the broader equity market today, how much would you allocate that toward that portfolio?
I recommend, it depends, of course, on the individual, but 50%. I'm personally 50% buy and hold, 50% in that strategy of the money that's invested in the markets. I got my money invested in my business and all that sort of thing too, which is further diversification.
Yeah. And that's what I heard about high net worth individuals. If you look at their portfolio, it's about 30% invested in just the broader equity market, whether it's ETFs or stocks, and then another 30% in private equity, 30% in real estate, and 30% in their businesses or so. That doesn't all add up, but very similar in that respect.
I like that. That's true diversification, if you ask me.
Yeah, that's great. What else should investors think about when they're thinking about maybe repositioning either their mindset or their investment strategy? And then also regaining time freedom, right? It's not just about allocation of your available funds. It's how do I position myself so I'm not working 80 hours a week and reclaiming that time freedom?
I think that the number one thing that I had to kind of wrap my head around, again, it's a change in how I looked at things, is most of the time when you're talking investments and someone mentions a cash account, like money market funds or high yield savings, they're like, just have enough for an emergency, but you don't want that money there because you want that invested because that's where you're going to get the returns. I don't believe that anymore. I think I first learned about this a long time by listening to something Morgan Housel said or read something he wrote, but he said he holds a lot more cash. I hold a lot more cash because cash is freedom, right? If you're in a bad job or something happens or whatever, if you've got the money available to you, the stock market crashes, you have money to go put in the stock market. Like having some cash, yes, at least now you can earn what, 4.25% or whatever on it. But having some amount of dollars in cash or cash equivalent accounts is huge for the feeling of freedom. And it's not just because cash is defensive, it's offensive. Business opportunity comes, a real estate investment comes along. If you have the money available, you can put it in it. So I never would have paid so much attention to how much money is in cash. I totally changed my tune on that. And it comes from how I think it really helps with, it helps for a life of time freedom. Cash is freedom, basically.
Yeah. And I think about this past half year and the fluctuations in the stock market. Not that I want to play the market or time the market at all, but
Me neither.
like I had cash in the stock market and it would just go up and down. If I had cash sitting aside, then at least I could take some of that and invest in when the market was down and feel good about that rather than just sit in the market and watch it fluctuate like that.
It just helps. Having some cash helps me sleep better at night. And I think if your goal, and this is a good goal, if your goal is to maximize make as much money as you can make, then you probably don't want to hold a lot of cash. But if your goal is maximum freedom, which is my personal goal, then I think cash has a very important role in that. Again, like what's your goal? I think every way of investing is a good way of investing. It depends on what your goal is.
Yeah. Yes. And I think part of it also is like your profession, right? You know that you're a W-2 employee and you always have, not that you shouldn't have an objective, but you're on someone else's clock. Like you are working their clock versus your own clock, that you really can't control your schedule. So you have to figure out that role for yourself, either within the company and if they're flexible enough, a flexible type of role, or outside of the company, become independent and have that mindset where you can regain that control of your life and then work however much you want to work to the extent that you can meet your end goals.
Yeah. And I think it hit me at that 37, but I think from between 35 to 45, you look at yourself in the mirror and you're like, okay, what's my plan now? I've been at this for a while and you think, am I going to stick it out and keep doing what I'm doing at my employed position? If so, great. Or if you want to switch out and do your own thing, great. I think it's the only bad decision is when you're like, I'm not really happy right now, but I'm getting close to reaching my number. I'm just going to stick it out for another.
I feel like I'm in that position. I feel like you're talking about me.
That's not a good one. It's where you're, oh, am I settling for this? Yeah. Again, I didn't like when I listened to that Marissa Mayer story, I didn't just change things right away. It took me a while, but I ultimately decided to.
Yes. And I also think at some point, maybe it's like in your 40s, right? To kind of rediscover what you want to do. It's not too late. You can turn around and do whatever you need to do to get to that point. And hopefully you would have built up some investment, some retirement portfolio that it's enough buttress that if you do decide to leave and pursue your dream role, whether it's as a solo entrepreneur or within another organization, that you can take control of your life back again. So that's a great perspective to have.
Yeah. By the time you're 45 or whatever it is, you've got some great assets. You've got skills, you've got a network, and you've got hopefully some money saved up. I think I advocate this 1 year process if you're thinking about shifting, and it's getting that network back active again and making sure that there's no skill gaps. And then you're not really taking a risk. Sure, it's a risk, but I think going out on your own is much less risky than people actually think it is. For me, with layoffs and stuff, like that's a big risk. Like all your income just boom. But anyway,
how do you, is there a way to dip your toes and just test out what you would be interested in? Whether it's like moonlighting or not really doing an internship, but like working for someone maybe much more knowledgeable than you. Did you do any of that or did any of your clients do any of that?
Yeah, I did. And people that I've talked to, I've done my fair share of side hustle and all of that sort of thing. I'm against that right now. Like it's
Mm.
just, it's a lot of work and certainly it's not time freedom. That's for sure. I've leaned more toward, I think that I learned about it first in that book, Designing Your Life. It's by those two Stanford professors. I forget their names, but they advocate identifying people that you want to be like and going and
Mm.
talking to them and observing them. To me, seemed way more valuable and doable from a time standpoint to figure out and try out what these things are that you might be interested in. Usually, if you're going to step out into something, it's in the general area of something that you've already developed all your skills in. So you're not coming up
Right.
with some brand new idea about some new potato chip you're going to start a business on. It's
Yeah.
like an extension of what you've already been doing. And so you have a network and you can talk to people that are doing this kind of thing. If they're in another part of the country and it's not a national thing, people are really willing to help you out and tell you all the mistakes they made so you don't have to make them.
Yeah. That's wonderful. So I think that gives me a lot of ideas on what I can be doing and maybe like our audience members can be doing. I think a lot of if I think about our audience members, they span people who have just graduated from
Mm,
all the way through mid-career to almost end of career. And so I think from our audience members' perspectives, really depends on where they are. If they are unsatisfied with their job, then they might want to make a switch either to another W-2 role or pursuing their dream job and being a solo entrepreneur. And I think they have a lot to take away from this conversation, which is great. Is there any other component that they should be thinking of when you're thinking about this approach and when you do your consulting with prospective clients?
Yeah. So I'm working on a book that's many months in the making and it's going to be better for it.
Yeah.
And it's not due out until April of 2026. But chapter 11 of that book is all about making this transition. And I advocate for a 3-year process. The thing that I haven't mentioned, so the first year is I did talk about the network and the skills and whatnot. The money part of it is that I really do think that you should plan to make $0 in your first year in business. And there's reasons for that. Oftentimes, when you're starting out, you're just chasing money and then you start doing things that aren't ideal for you or what you're trying to figure out. And if you plan to make no money, you can make quick pivots and figure out what people will pay for. But to do the money part of that is you need to, as you're getting ready for the switch, is assemble that savings that will allow you to accommodate not having income for a year. And many people can do it, especially if, they've been doing well so far in their careers. Think of it as an investment in yourself. I know so many people that were doing really good things at employed positions, and now they're just doing that much better and working less. It has to be very thoughtful and purposeful in how you approach this, but it's very possible. And also, I don't advocate burning bridges. You try this out for a couple years, you can always make a decision and go back. I think if you come back 3 months later with your tail between your legs, people will be like, oh, welcome back. But if you try and been working at that for 2 years, I've seen people respect you for taking a go of it. You've learned so much as part of that process. I don't know. I get excited about people starting stuff out on their own because I don't know. It's fun for me.
Do you find that it's easier to do in just where we are, or do you find that like some people, as you mentioned before, like they go to another country, like during COVID, they went to Portugal, they went to
Mm.
Puerto Rico, they went to Costa Rica, or like some other place, and rediscovered themselves, how they like to
Yeah.
work, and the country themselves. But do you factor that in, what they're interested in, maybe
Yeah.
traveling?
I think it's not as remote as it used to be, but it's way more remote than it was. And
Right,
I think the
correct,
ability to work remote and with the type of work that we do these days is hugely liberating in terms of being able to do flexible work. I
right.
think I would have loved to moved and traveled to some of those countries, but I have a kid and he needs to go to
Correct.
school.
Yeah.
It totally depends upon your personal situation. Now, like when he graduates in 5 years and hopefully goes off to college, at that point, my wife and I want to spend 3 months a year in Spain, or the next year we'll do autumn in New York City. We don't really know New York City that well, but I think
Yeah.
that would be really fun to do. And I just think it's important to realize that there's ways to make this stuff happen sooner than you think. My biggest fear is that I'd be able to first do this at 70. And then by then I have a bad back and I can't enjoy anything. That's the
Yes.
hardest thing to think
Yeah.
about.
Yes. Yeah. I think that's one big consideration that we have in mind as well. We love traveling before kids. Now we have kids, one's going off to college in a year, but
Hmm.
we have some time. And so we do want to slow the pace of life down, do a lot more traveling with our kids
That's
before,
awesome.
like, before they get to a point where they have too many obligations that can't travel with us. Right. And so we want to make sure that we give them the opportunity to be able to do that. But that means we either have to make some sacrifices or we have to come to a point like we're satisfied with like our fire number. Like we always want to go and accumulate as much as we can, but at some point we just have to say, this is our fire number. We can live on this and live the best life possible with that number.
And if something happens, then just try to stay I think part-time work is a great thing. Part-time,
Yes.
interesting, high-level work was great. I don't know if this is a real story or as an example, but it was a patent attorney, an international patent attorney that had worked in his life in this industry, and he had great credentials, and he traveled all over the world, and he was able to like make 500 grand and work 20 hours a week, 6 months out of the year, and have
Mm.
all this travel. The question posed was like, why would you want to give that up? Like, you meet interesting people, you keep your mind fresh, you're traveling all over, you have all this free time. I'm like, you know what? Yeah, if you could design this perfect work, and sometimes just nature happens and you get a physical ailment or something happens. And of course, we got to consider that. But for the majority of the people, do it. And if you know you're going to be doing that forever, like we coming full circle, then you're going to be much more likely to say, hey, let's take 6 months off right now because I'm not going to get behind.
Yeah, that's great. We're getting close to the top of the hour. We always ask our guests two questions, these two
Mhm.
questions. One is looking back, call it 20, 30 years, what would you say to a younger Brian? What would you
So
advise them?
I would say that if you think you're going to go in this straight line from here to here, you may, but that's not necessarily the best path.
Right.
I have come to learn now as I'm older that taking a detour can be so interesting and could potentially catapult you higher up that straight line path that you originally planned for. When I came out of school, I knew what I wanted to do and I knew where I wanted to go. And I wish I would have backpacked across Europe for a year. That's a
Yeah.
perfect example
Yeah.
because I'm going to get back there. I'm going to be older, but I wish I would have done that sooner and without the fear that, oh, I'm going to get behind
Right.
in my career.
Yeah. And you're right, absolutely right. Like the kids graduating either from high school or from college these days, they're, I think there's a mindset that they have to get going. They have to start working. They have to start accumulating the wealth and living their life. Versus in Europe, a lot of people just take a year off, a sabbatical, and just or a gap year, and just take that
Mhm.
gap year before they actually start working because you have the rest of your life to work.
Yeah. And
Because
oftentimes you'll probably meet that person on that trip that you end up starting a business with and you become extremely
correct,
wealthy. I
right,
mean, that kind of stuff. You hear those stories all the time.
yeah. Or you think about what you truly want to do in life, and so you
Yeah.
get that inkling of that thought in mind during your backpacking. So
Yeah.
that's great as well. The other question we ask is, how do you give back to your community?
Oh, I I live in Alameda
Yep,
in California, and we do a lot with the food bank there and things
that's
like
great.
that. It's a great organization, and it's surprising. Like sometimes you'll get emails from them about that they're experiencing more people being hungry, and you're like, I wonder. And then you're like checking the news, and you just can't like figure out why it is. But it's nice that they like reach out and let you know so that you can give back more in those times.
That's great. I used to work in when I was in business school, a food bank that collected food from events that were not eaten. It
Cool.
just typically throw those away, and those can be distributed to the homeless or homeless shelters. So same
That's
idea.
wonderful. Otherwise, there's so much wasted food.
There is. For those people who want to reach you, Brian, how can they reach out to you and find out more about you and the services you provide?
Yeah, I would actually I mentioned this earlier in the session, but timefreedomcalculator.com is a free to use resource. I mean, you can create an account and save off your scenarios if you want, but you don't
Mhm.
have to. So just feel free to use it. And on that site, though, there's also other ways to learn about my book or contact me or things like that. But it's a nice jumping off point and hopefully can provide you some values if you want to map out kind of your future and see if time freedom is nearby.
That's great. We'll put that in the information details and the description of this particular podcast. Thanks, Brian, for all the time you've spent with us. Don't forget to like and subscribe to our podcast on whichever platform you're listening to make sure that we can bring you the best educational content. And thank you, everyone. Until next time, keep learning to invest for generational wealth.